Welcome to the Daily Update, where I'll go over the action in the market for Monday, October 9th, and then we'll see how things look for Tuesday, October 10th. It was quite an interesting weekend geopolitically. You probably are well aware that Hamas attacked Israel, and now Israel has declared war on Hamas, and Hamas is backed by Iran. And so what we're watching for now is to see, is this going to escalate? Is this going to stay more local within Israel? There's a lot more going on than has gone on in the past. And yes, this had an impact on the futures when they opened. We were down anywhere from about 0.5% down to about 0.75%. We did have a gap lower open in Monday's session, but then the market spent the rest of the day coming back. The only thing is, I'm not going to address what's actually going on there. That's beyond the scope of these videos. The only thing that I would suggest is over the next couple of days, possibly week or two, there tends to be a real shift if you want to find out the truth, where, okay, right now Israel is the victim since they were attacked, but it's not very common for the narrative to change, especially as Israel is starting to fight back, where all of a sudden Israel is now seen as the bad guy. That's all I'm going to say about that. Look for facts. Try to find the best information you can if that's something that is of interest to you. But there's a lot of misinformation and malinformation, bad information that's out there. And that can often cloud what we're doing, because this might be one of those situations that we're going to have to pay attention to for a while. And so we need to know what's actually going on to see how that will affect the market. Markets like gold, the dollar, oil, and ultimately over into the stock market, that could have an impact on what's actually happening. Let's go back and talk about what happened on Monday at the open. We had a gap lower open in response to what was happening. The futures were negative, but we found support at the daily pivot at 42.84, which ended up setting the low for the day. Then as the day went on, we rebounded back up to the unchanged level, and we were able to close above the August 2022 high at 43.25. That had been acting as overhead resistance. We were able to close above that. So we're seeing things turn a little bit more positive. In fact, in the short term, we are turning back to positive, but there's still a lot of damage that needs to be repaired. Going into the close, we were up 0.63% on below average volume. You had a lot of people just kind of stepping back. The bond market was closed. So bonds, other than on a futures contract basis, have not really had a chance to react to what's happened. And we had one of those days where the bond market was closed and the stock market was open. So stocks have had a chance, but bonds have not yet. And that could produce some gyrations. The technicals were still negative, but we're turning positive in the short term. We're seeing some improvement in the intermediate term, and we're still positive in the longer term. And I've added another thing to our geopolitical list here, the Israel-Hamas war. I'm not sure quite what to call that for, that's what the media seems to be referring to. What we're waiting for now is, okay, to get proper news that's coming out of Israel, but is there going to be an escalation in this? Is the country of Iran going to get involved in this? They back Hamas. Is the U.S. going to get involved? The U.S. is already trying to help out Ukraine in that whole situation. Is, what's going to unfold in all of this whole scenario? Some comments that we can make. The Israel-Hamas war has added another geopolitical event to watch. And other than, I'm really trying to stay factual in this. In fact, I already planned, bought, and paid for a trip to Israel at the end of November that was going to go up until about the middle part of December, but I don't even know if that's going to happen right now. But we need to try to keep, at least this is my approach, keep our personal views, our personal opinions, our biases, just try to go with what the facts are, and then we can apply those to what's happening in the stock market. The bond markets were closed for Columbus Day, but bond futures still rose. They saw that as a flight to quality, where people were getting into the futures contracts by buying, and that will end up pushing interest rates down, which could give some support to stocks. But a lot of things can happen between the time the market closed on Monday until it opened on Tuesday. And so we need to be aware that a lot of different dynamics can take place. Oil did rise as well. That's an oil area, the Middle East, and you have Israel, which is not a big oil player per se, but you have other countries that are connected to oil. And so we saw oil rising. That didn't have a real negative impact in Monday's session on stocks, but it ended up closing at 86.42. That was up over 4%. The micro caps are still getting near that new 52-week low. That's more negative. We want to see them doing better than what they've been doing. On a short-term basis, we just have our stochastics, and that's the longer-term short-term chart, and I'll show you that when I get there, that is extreme negative, and you can't even really have our standard deviation chart on there because we're coming back up to the midpoint. I should have taken that off the list. And believe it or not, after Friday's up move and Monday's up move, we have the Stoch RSI that's already extreme positive, and that should be, overbought. Okay, and then on an intermediate term basis, we're keeping an eye on the TTM squeeze. That's starting to show some improvement. The PMO studies are working off being oversold and showing some improvement. This is kind of a big one. The bullish percent index has now crossed back above 30. That could be a pretty significant positive signal. The chicken money flow continues to show some improvement, and the 10-period average of the S&P 500 new highs minus the new lows, those are showing some improvement too, but I just kept them on the list because I wanted to make sure I mentioned them, and I will show you charts of all these. We don't know, is the scenario going to change now? We've been dealing with this idea that the economy is stronger than expected. The Fed will have to keep rates higher for longer and possibly raise rates. What's this new geopolitical event going to do to the market? But we're still keeping an eye on the Chinese economy and oil prices, which already have had a chance to react to what's happened. The dollar was up and interest rates, at least on a futures basis, were down. The dollar being up didn't really have much of a headwind in Monday's session to push stocks lower. We still have the 30 to the 5, the 10 to the 5. Those are back to being normal. And then the other yield curves remain inverted. I don't have any charts of these because the bond market was closed on Monday. Sentiment is still negative. It's ticking up. It had been at 29. Now it's at 30. Our trend, we're starting to see the ADX in the short term dropping below the moving average. That's suggesting that, yes, we're in a trend, but that trend is starting to weaken. The intermediate term ADX is just about ready to cross over the moving average, but it's also still negative, and we're still in a trending environment because we're above 20. Our bias now is positive. We've had 2 up days in a row. Although because the bond market was closed, I'm still keeping the momentum to mix to positive. And that's where I take the last 2, 3, 4, 5 days together and kind of come up with a consensus of, are we having a tendency to be positive or negative? I'm saying mixed to positive. We didn't get any economic reports in Monday's session. We didn't have any updates to our charts as far as interest rates are concerned, but we're still going off of that close last Friday at 4.78%, which is above the 4.02%, which can put pressure on stocks. Here's the intraday chart where we gapped lower, and that was not really a surprise. I was really trying to keep an eye on the futures, and that did carry over into the open where we gapped down here. We were a little bit above the daily pivot. We bounced a little bit. We came down and actually set the low and found support at the daily pivot before going up to the unchanged level. It acted as resistance once. We fell back, and then we were able to break through that. We also were able to get above the August 2022 high and close pretty much at the high for the session. So it was a fairly positive day. Looking at growth versus value, the green line is still on top. Even though they both advanced and were both positive, growth is outperforming value. We're also seeing that here as well, where we ended up being positive when we look at S&P growth versus value. And I've been pointing this out, that it was about the 22nd or so of September when we started to see growth really outperforming value. And this has been under the surface and could be feeding into some positive action that we're seeing. Now, we can just wipe out everything positive in a very short period of time. We just have to go with what we're seeing right now. Looking at an end of day measurement of growth versus value and taking a ratio, we're starting to break out here. So we're showing some more positive action. Looking at the condition of our trend, we're not quite below the moving average yet, but we are rolling over. The red line's still on top, even though it's declining, so we would default to positive. The green line is showing some improvement. Now, if we start to come back down and show a weakening trend and see more follow through based on price, this could end up switching over to a positive trend, but it's not there yet. In the short term, we've already dropped below the moving average. The red line is declining, the green line's going up, but we're still below 20, so we're in a trending environment, but it is weakening. We're also keeping an eye on the VIX, where we're coming up closer into the mid part of October now, where a lot of times this is where the VIX ends up topping out, right around this time. Looking at the ulcer index, it's starting to drop off a little bit. We've had 2 up days now, so fear is subsiding slightly. Keeping an eye on the VIX, where we ticked up a little bit with the line chart, and we closed kind of near the low on the bar chart. So we're seeing fear start to fall back. When we look at the VIX of the VIX, we're also seeing volatility starting to come back down to the moving averages. As things are going up, this chart has a tendency to go down. The VIX of the VVIX ratio is continuing to go up. That's longer term negative. The equity put call ratio, this could be positive. We're up in an extreme reading area, and now we're starting to roll over and come down. But again, we need to see follow through with this. Typically, what will happen is if this ratio continues to decline, that would be more positive for stocks. But longer term, we're continuing to go up. This is a 253 period moving average, and it's going to take a long time to roll that baby over. Looking at the advanced decline line, seeing some improvement based on price and volume, where we've gone back above the moving average now based on price. We're seeing a little bit of an improvement with the new highs, new lows. We saw the green up here. That's new highs, a little bit higher, but we're still seeing more new lows being generated, even though it's starting to decrease. We're starting to turn up a little bit with our 5 period and rolling up a little bit with our 10 period moving average. The advanced decline ratio showing some improvement here, but still negative. The blue line, which moves faster, it's showing some, at least, potential improvement, but we're still below 0. The accumulation distribution, this could be positive. We saw some improvement after Friday. We're now crossed back above this red line after Monday's session. Now we need to stay above this and have the red line turn back up for things to turn more positive. The chicken money flow has not turned positive yet, but is continuing to show some improvement. Looking at the risk on, risk off ratio, we really didn't change there. In fact, we were down 0.5% with this ratio. So that's more short to intermediate term negative right now. Here's the daily chart where we were able to close back above this long-term trend line now. Can that continue? The further we go above this and the longer we stay above this, if we do come back down, that may act as support again. But for right now, one day does not necessarily make it all that important. It is important that we closed above this, but the fact that we could stay above this. On the bottom, we can see where volume did drop to below average. Here's also another volume measurement that we use. On an average basis, we're still doing okay, but we dropped off in Monday's session. Here's the Stoke RSI, which is already extreme positive. You have 2 up days and bam, it just really goes off to the races. The force index is starting to go back above 0, and that's turning this more positive. The short-term stochastic, we're showing some improvement here. We're also seeing some improvement with the intermediate short term. We're still extreme negative in the long short term, but we are turning back up. We need to see follow through. And here's the force index again, in case you didn't get it the first time. The Swenlin trading oscillator turning more positive. We're crossing above 0 based on price. We're getting back up to the midpoint based on volume. So this is showing more intermediate term improvement. The go, no-go system remains in a pale shade of deep purple. So that's more, it's negative because they're purple, but since it's a lighter color, that's more positive to neutral. The TTM squeeze continues to show some improvement. And on a longer term basis, it's harder to see, but we're just trying to get some context to when we had some extreme readings with this indicator. The balance of power, still negative, but showing some improvement. We're getting back up to the midpoint with our highest high and lowest low values. The red line is starting to flatten out and has for a few days. We need this to really go up and see the blue line start to turn up for this to turn more positive. The ultimate oscillator is above the midpoint and advancing. This is now positive, where the money flow is still negative, but showing improvement. It's below 50. The vortex continues to be negative, but we're seeing the red line coming down and the green line going up. This is positive now. If it can hold, we dropped below 30 with the bullish percent index, and now we crossed back above 30. And this tends to be an important signal if we see more follow through. The S&P 500 McClellan oscillator is now above 0 and starting to advance. That's turning things more intermediate term positive. So we're turning back up based on price, and we've already been turning up for the last few days based on volume. Sometimes the volume indicator is a leading indicator for this. The NYSE McClellan oscillator also crossing back above 0. That's turning more intermediate term positive. We're not seeing it really reflected all that much with the summation index yet. We're just barely turning up based on price as well as volume. The elder impulse system for the S&P has now switched from neutral to positive. The Erin is flattening out right now after what you could suggest is an extreme negative reading, but we're not seeing a change in this indicator yet. On-balance volume starting to come back up to the moving average. If we can get above that and see the red line start to go back up, that would turn more positive. The Copic curve is just in the process now of generating a buy signal. The RSI based on 9 periods has crossed above 50. We're still negative based on 14 periods, but we are showing some improvement. So short term, this is turning more positive. Intermediate term, improving, but still negative. Looking at our 200-day simple moving average study, turning up on the top chart, and we're showing some improvement with the bottom chart, which measures the 50-period moving average study. The PMO is starting to turn up, but has not crossed above its moving average. We're turning up based on price and volume. Our PMO study, we're showing some improvement with the PMOs that are rising. We're no longer extreme with the buy signals. We are extreme negative with the PMOs that are above 0, but it's starting to flatten out. The NYSE bullish percent index just barely ticked up. So we're not seeing a lot of new point and figure buy signals being generated in the broad market, at least yet. The NASDAQ 100 bullish percent index is showing some improvement and was up, but it's still below 50. The slope oscillator has now switched over positive after getting extreme negative. The MACD is just getting ready to cross above its moving average. So when we look at our oscillators, we're showing a lot of improvement in the short term. We're actually turning positive there. Intermediate term, we're not quite positive yet, but showing some improvement. Longer term with our oscillators, they're just barely turning back up, and it will take some more time for these oscillators to turn positive if that ends up being what happens. Looking at our moving averages, where we're above the 200-day exponential moving average, we're now starting to come back up to the 20-period moving averages, and we closed right on the 20-period exponential moving average. So this is showing some improvement, but we want to get above these moving averages for things to turn more positive. And we're right back up to the midpoint now with the standard deviations chart. We're no longer extreme. I should have taken that off the list. The Chaikin oscillator is continuing to be positive now, and we still have a second day with the parabolic SAR. We had a dot underneath after Friday, another dot underneath after Monday. This is longer term positive, and we just barely closed above this 100% retracement level with our short-term fib chart. The fact that we closed at that level is positive. Now we want to know, can we stay there? Are we going to be able to build and actually go higher from this level? And also, we're just barely above the 61.8% retracement on a longer term fib chart. Can we stay above it? Can we build upon this? And we're coming back up into the bottom part of this mini rainbow when we look at the 20-period simple moving average of the open, high, low, close. I hadn't been showing this chart because we were far away from this. Well, over the last couple of days, we're starting to come back inside. To turn more positive, we want to see price break above this and then see the colored lines start to turn and go up. And we're still a little bit above this longer term trend line. The fact that we closed above that is now positive. We want to know, can we hang on to that? A special K chart, this is longer term negative. We are getting ready to cross below the red line. Unless we see some pretty strong upward movement, we're going to get a signal that's a sell signal here, and that could be longer term negative. Now, it doesn't mean that all is lost. We could come down and then turn and go back up. We had another signal where it was trying to go positive back in April. It just barely went positive, went back down, and then took a little bit of time, but it eventually ended up generating a signal. We're still above the midpoint of the trend channel going back to 2009. And we're also looking at the 50-period moving average study. We had gone extreme negative here, and we're bouncing up out of that. That could be a significant signal. Then looking at the 19-day exponential moving average of the advanced decline ratio, we had become extreme negative, and we're starting to really bounce up here, both based on price and volume. The microcaps, though, this is a bit of a concern. They were down in Monday's session and dropping further below 100, setting a new 52-week low. The Heiken Ashi is showing some improvement for the S&P. We're turning back to black with the Kegi chart. That's positive. The Renko has not picked up any of the movement yet. That's still negative. The 3-line break is showing a bit of an improvement with an open candle. The equal weight had a fairly good day, but it's still the big stocks that are really leading the market higher. And we're seeing that in the ratio here, where the Magnificent 7, Great 8, Illustrious 11, whatever that you want to put them into, it's just showing that it's the mega caps that are really holding up the market. We're coming back up with the Dow after setting this base at this S1 level, but we're still below the 200-day moving average. We've turned back to positive for the diamonds for the for the Dow Jones Industrial Average and the Elders Impulse System. And we're coming back up to another resistance level. Now, we closed above the pivot point for the NASDAQ 100. That is positive, but we're going to have to see, can we break through the 50-day moving average? And if we break through that, can we break back above this previous high? Where we are now continuing to be positive with the QQQs for the Elder Impulse System. We're turning back more positive with the NASDAQ 100 PPO. It's crossed above its moving average. Now it's still below zero. It could always turn and go back down, but it is starting to show some improvement. And we're still above this 61.8% retracement level for the NASDAQ 100. Looking at the NASDAQ, we were able to close above this pivot level. That's positive, but we still have the 50-period moving average above current prices. And we're getting a little further away from this 50% fib retracement level where we've been dancing above and below it. Maybe we can break above this and start to challenge the 61.8% retracement level, or are we going to come back down and dance along the 50% retracement level again? The small caps, this is a concern. We're just getting ready to register a death cross here as the small caps have been under a lot of pressure. Now, they're still bouncing up, and they were up 0.84%. So that's showing some improvement. But the longer we stay below these moving averages, the more likely they are to roll over. And we're also looking at the Russell 2000 small caps, where we're seeing a potential head and shoulders top here. We are seeing some improvement after coming back down to these support areas. We're showing a bit of an improvement with the MACD. It's trying to turn up, but it's not quite positive yet. And we are seeing some improvement with the RSI on top, where we continue to be neutral for the Elder Impulse System when looking at the small caps. The small cap to S&P 500 ratio continues to decline. That's not necessarily positive. The mid caps also were up 0.75% on Monday, but still below both the 50 and 200-day moving averages, where the mid caps remain neutral. So you can see where the big ones, they're doing a lot better. But when we look at mid-cap growth versus value, it's starting to break out above these previous highs. So this could be some internal strength within the mid-caps that could help feed into the market. Looking at Dow theory, we saw a little bit of a bounce with the Dow, a little bit with the transports, and also a little bit with the utilities. The financial sector, also we're keeping an eye on this because we're below both moving averages, even though we're bouncing up slightly. If we stay below this red line, it's eventually going to lead to a death cross. The FANG index was able to barely close above its 50-day moving average. That's turning things a bit more positive. Looking longer term with our arithmetic scale going back to 2009, we're getting a little further away on the upside of this upward sloping trend line. That's more positive. And we're also seeing a real decline with the Staples to S&P 500 ratio. That could give support to the S&P. Looking at growth versus value, we're seeing the Qs outperforming the S&P. Discretionary is lagging behind a little bit and actually declining here, where large cap growth is outperforming large cap value. The large caps are doing okay. Mid caps and small caps are all showing an improvement. But this is longer term negative. Our 50-period exponential moving average of the new highs, the new lows, we are dropping below zero. And our indicator, even though it's showing some improvement, continues to be below zero. So that's bringing the red line further down below zero. The 10-day average of the S&P 500 highs minus the lows, they're just coming off of giving us an extreme negative reading. This is a little bit longer term indicator since it's based on 10 periods, but the fact that this is going up could be positive. The dollar was up slightly in Monday's session and continues to be in an uptrend, which may pressure stocks. Also, we're coming up to the end of this cycle. We will have a new cycle start on the 11th of October. Is that going to produce some kind of a change in what we have been seeing? So what's our outlook for Tuesday? We will have some earnings reports coming out. They're pretty lean right now. The UAW strike, it's like, what? Do you mean there's a strike going on? If you were paying attention to the news like I was over the weekend, where they're still trying to figure out who the new Speaker of the House is going to be, and that could still take some time. We do have the Israel-Hamas war that's now going to be at the focal point. We'll have to see if it stays in the focal point or if that kind of drifts off the table a bit. The technicals, we're still negative, but we're showing some improvement and we're turning back to positive in the short term. We will get the NFIB small business optimism. That'll be released on Tuesday, as well as wholesale inventories. Not really big. The big reports are going to be on Wednesday, Thursday, and Friday. And then the geopolitical events, which again, down here at the bottom, I've added the Israel-Hamas war. I don't know what to call it. That's just what I've been hearing so far in the media. Showing what will be coming out on Wednesday, we'll have the PPI. That's a pretty influential inflation report. We're also going to get the FOMC meeting minutes. And then the really big one is going to be on Thursday when CPI comes out. And then an important report on Friday will be consumer sentiment. Looking at the Stock Traders Almanac statistics for October 10th, we're neutral to positive across the board with all three indexes that we follow. So we're still wondering. This is the green line, which is when we have a sitting president who's running for re-election. Are these little bounces up? Is that what we're experiencing right now? We're also kind of wondering that same thing when we look at the Carson chart with the NASDAQ. Are we seeing a little bit more bounce? Please be aware that sometimes on a historical basis, we tend to have some weakness going into the latter part of October. And also looking at the S&P, are we seeing that bounce now? But we also show some historical weakness later in the month. We are up 10 out of 18 times in the month of October, going back to 1950 during pre-election years, where we're down 8 out of 18 times, a slight positive advantage. And then keeping an eye on Bitcoin, and you've got people that are really into this and they're so sure that they got this all figured out. If you just go back to the past few years, we see a nice little bounce. Or if you take all the years together, we pretty much have been going sideways. So we're continuing to go sideways right now with Bitcoin. But I've been seeing some posts and people are just sure the moon is the next stop when you look at Bitcoin. But we are working off of a recent death cross. So our scenarios, we're still leaning more towards the down one, even though we're seeing some improvement. And in the short term, we're turning more positive. We can't really go with that yet. We're not seeing an awful lot of confirmation. And we're not going with the sideways trend for right now, because even though our ADXs are weakening, they're still above 20. So our warning signs, and I've tried to move this around a little bit, and I'll show you what I mean as I go through this, where seasonally October is a better month than September, but that's not hard to do. The long-term equity put-call ratio is still going up. That's longer-term negative. The risk on posture, even on an up day on Monday, it still went down. That's kind of negative. The S&P 500 oscillators are negative. We're turning more positive in the short term. We're seeing some improvement in the intermediate term. The long-term indicators are still negative. The NASDAQ 100 PPO is negative, but improving because it's below zero, but it's now crossed above its moving average. The 50 period new high, new low exponential moving average study is negative. The Russell is still below its 200-day moving average. We're getting ready to see a death cross there and wondering if we're working off of a head and shoulders top. The vortex is still negative, even though the red line is coming down and the green line is going up. Then what I've done is I've tried to put the longer term signals on a separate slide that I won't mention every day because I'm repeating myself all the time. And a lot of these are based on the weekly video. So just feel free to read through these. I won't read these off. It's like I'm just being a broken record here. And I've done the same thing with the positive signs where we have seasonality and setups. That's probably going to get moved to the other slide. The daily special K chart, we are seeing a decision potentially being made with the daily chart, and it could be switching over to negative. The equity put call ratio is now going down. It had been going up. This could be positive. The parabolic SAR is positive. The BPI has generated a buy signal by going back above 30. The Copic curve is really close to generating a buy signal. The S&P 500, based on 9 periods, has now crossed back above 50. That should be the RSI indicator. I forgot to include that. The S&P remains above the downtrend channel upper line. That's going to be switched over to another slide. The Staples to S&P 500 ratio is declining. That could be positive. The S&P ratio to utilities is going up. The Russell, the small caps and the mid caps, they're still generating those golden crosses, but they're in danger of them switching over into death crosses. Small and mid cap growth continues to be positive. The financial sector, it's generated a recent golden cross, but it's also below its 200-day simple moving average, which could eventually lead to a death cross. And then here I tried to put these on a separate chart, and I'm got a little more work to do, I can see there. So our conclusion, we're negative but improving. In the short term, we're turning positive now. In the intermediate term, we're still negative but showing some improvement, and we're still positive in the longer term. Thank you. I hope you found this convoluted video helpful. I hope you have a really good day. We'll keep in touch with what's going on in the news and how that affects the markets, and I will talk to you in the next video.